A lot of terms related to taxes and fraud might sound unfamiliar to most of us, but today is all about familiarity. Let's talk about corruption, which Black's Law Dictionary defines as moral decay that results in behavior that exploits one position for one's benefit at the expense of the organization. While less frequent than asset misappropriations, corruption schemes tend to cause more financial harm, according to the ACFE 2022 Global Fraud Survey. These schemes include economic extortion, bribery, conflicts of interest, and unlawful gratuities. Of these, conflicts of interest account for the majority of the studied cases. Hi, and welcome back to our channel where we discuss fraud and tax awareness. Before we continue, if you're new here, please make sure to subscribe and press the notification button so you can be notified when we upload new videos. First, let us learn about the various types of corruption schemes to understand the bigger picture of corruption. Bribery. In simple terms, a bribe is an illegal business transaction in which power is purchased with money. There are two primary types: bid rigging and kickbacks. Vendors who participate in kickbacks give workers of purchasing organizations hidden money, frequently in an attempt to overcharge or win over new business. While bid rigging means manipulating the bidding process to guarantee that a vendor receives a contract unfairly. Illegal gratuities. Illegal gratuities share similarities with bribery schemes, although lacking a specific intent to sway a particular business decision. For instance, one case study involved a city commissioner who engaged in negotiations for a land development deal with a group of private investors. Subsequently, upon the approval of the deal, the commissioner and his spouse were generously rewarded with an all-expenses-paid international vacation. While it's plausible that the promise of this trip may have influenced the commissioner's negotiations, proving such influence could be challenging. Nevertheless, the mere acceptance of such a gift constitutes an illegal gratuity, a behavior prohibited by the majority of governmental and private company ethical codes. Economic extortion. Economic extortion represents the inverse of a bribery scheme. Instead of a vendor offering payment to an employee to influence a decision, the employee demands payment from a vendor to sway a decision in their favor. In any scenario where an employee might accept bribes to favor a specific company or individual, the dynamic can be reversed, leading the employee to extort money from potential purchasers or suppliers. One case study showed a plant manager at a utility company who initiated his own side business. Vendors seeking to conduct business with a utility company were coerced by the manager into diverting some of their business to his own enterprise. Those unwilling to comply faced losing their business relationship with a utility company. Conflicts of interest. A conflict of interest happens when someone who works for a company secretly benefits from a deal that harms the company. The problem here is that this benefit is kept hidden, and the person is taking advantage of their employer without them knowing. There can be a conflict of interest even when an employee discloses it to their employer. When an employee reveals a conflict, it allows the company to assess the situation and take appropriate steps. These conflicts often come from secret financial interests, but they can also come from other reasons. For example, there was a case where a manager split up a big project to help out their brother-in-law, even though they didn't make any money from it. When someone takes a bribe, it's like a conflict of interest because they're getting money secretly and not thinking about what's best for their employer. But the big difference is why they do it. For example, if someone approves fake invoices to get kickbacks, that's bribery. But if someone recommends their own company for a job and approves overpriced invoices, even if they don't make money directly, that's a conflict of interest because they're benefiting their own business. Even though bribes and conflicts of interest might seem similar, they're different because of why someone does it. Bribes are for personal gain, while conflicts of interest happen because of hidden interest in a company. For example, in a case of bid rigging, someone might pick a company they have a hidden interest in instead of one that bribed them. But conflicts of interest aren't always about money. Employees can use their influence in lots of ways to help companies where they have secret interests. Most often, it happens in buying or selling situations where a company ends up paying too much or selling for too little because of an employee's hidden interests. Sometimes, employees even steal clients or move money away from their employers. Now that we're nearing the end of the video, have you ever wondered to what extent corruption occurs and impacts a nation? This may sound more like a lecture, but corruption is more than just these terms. Corruption destroys democracy, reduces trust, restricts economic growth, and increases social division, poverty, inequality, and environmental problems. There are many ways to detect and prevent it, but it is easier said than done. In the grand scheme of things, anti-corruption legislation exists to help prevent and detect corruption. The Foreign Corrupt Practices Act, or FCPA, created in 1977, stops U.S. company or people from doing corruption, even outside the U.S. It makes it illegal for them to give anything valuable to foreign officials to get or keep business. The FCPA has two main parts. One says you cannot bribe foreign officials, and the other makes sure companies keep accurate records to stop money misuse. The FCPA applies to anyone trying to pay or offer money to foreign officials to influence business decisions. Foreign officials can be many different people, like members of foreign governments or political parties. Besides bribery, the FCPA requires companies to keep accurate records and have internal controls to stop money misuse. Breaking these rules can lead to big fines or jail time for companies or individuals. Another similar law, the United Kingdom Bribery Act, also punishes bribery and has strict rules for companies to stop it. If someone breaks this law, they can be fined or sent to jail for up to 10 years, and companies can face big fines too. Do you think corruption is rampant in your country? Share your thoughts in the comments section below. Thank you for watching. If you're new to this channel, please make sure to subscribe and press the notification bell so you will be notified when we post new videos.